Dear students, today we are dealing with the topic working capital, meaning, concepts and importance. All business need finance. Whether it is big, medium or small, need finance to carry on its operations. Right from the moment someone thinks of a business idea, there needs finance. As the business expands, there arises inevitable need for finance. Finance requirements are basically for purchasing assets, goods, raw materials and for other flow of economic activities. So capital required for a business can be classified under two main categories: fixed capital and working capital. Now let us discuss about working capital. Working capital is the amount of funds necessary to cover the cost of operating the enterprise. That is, funds needed for short-term purposes, for the purchase of raw materials, payment of wages and other day-to-day expenses, etc. Working capital is also known as circulating capital, which means current assets of a company that are changed in the ordinary course of a business from one form to another. In simple words, we can say that working capital is the amount of funds required to carry out its day-to-day operations. Now, let us discuss about concept of working capital. There are two concepts of working capital: gross working capital concept and net working capital concept. In the broad sense, the term working capital refers to gross working capital and represents the amount of funds invested in current assets. Thus, gross working capital is the capital invested in total current assets of the enterprise. So, what are current assets? Current assets are those assets which in the ordinary course of business can be converted into cash within a short period of normally one accounting year. Example: cash in hand, bank balance, bills receivable, sundry debtors, inventories, etc. Next one, net concept of working capital. In a narrow sense, the term working capital refers to net working capital. Net working capital is the excess of current assets over current liabilities. We can also say that net working capital equals current asset minus current liability. In this case, net working capital may be positive or negative. When current asset exceeds current liabilities, net working capital becomes positive. When current liabilities are more than current assets, net working capital becomes negative. So, current liabilities are those liabilities which are intended to be paid in the ordinary course of business within a short period of normally one accounting year. What are the examples of current liabilities? Bills payable, creditors, bank overdraft, etc. So, gross concept of working capital means it represents the amount of funds invested in current assets, and net concept of working capital means it is the excess of current asset over current liabilities. Now let us discuss about the importance of working capital. First one, smooth flow of production. Sufficient working capital ensure regular supply of raw materials and thereby helps in continuous production. Second point, increase in liquidity and solvency position. Adequate working capital helps in maintaining solvency of the business by providing uninterrupted flow of production. Next point, goodwill. Sufficient working capital enables a business concern to make prompt payment and helps in creating and maintaining goodwill. Next, advantages of cash discount. If there is ample working capital, it enables a concern to avail cash discount on the purchase and hence it reduces cost. Next, easy loan. A concern having adequate working capital, having high solvency and good credit standing can avail loan from banks on easy and favorable terms. Next, regular payment of wages and salaries. A company which has ample working capital can make regular payment of salaries, wages and other day-to-day commitments, which raises the morale of employees. Ability to face crisis. Adequate working capital helps the organization to face the business crisis, which happens in the case of emergencies such as depression or financial crisis due to huge losses, etc. If there is adequate working capital, or if adequate working capital is maintained by a company, that company can overcome easily. Next one, efficient use of fixed assets. Adequate amount of working capital enables the firm to use its fixed assets more efficiently and extensively. If the fixed assets remain idle due to paucity of working capital, depreciation of fixed assets and interest on borrowed capital invested in fixed assets will have to be incurred unnecessarily. Last point, timely payment of dividend. Adequate working capital ensures regular payment of dividend to shareholders. So working capital serves as a metric for how efficiently a company is operating and how financially stable it is in the short term. Okay, hope you understood the concept of working capital. Thank you.